Welcome to this explainer. Okay, so for years, if you were a foreign investor, a startup founder, or just a globally mobile family looking for a new base, the undisputed, absolute champion of tax relocation was Portugal. But as we look ahead to 2026, that landscape, it has experienced a massive disruption. Today, we're diving right into this shift in global tax relocation and asking one really big question. Is Turkey actually the ultimate new alternative to Portugal's famous NHR regime? Here's exactly how we're going to break this down today. First, Portugal's shifting tax landscape, followed by Turkey's 20-year tax pitch. Then, we'll look at the main tax difference, compare the lifestyle draws, figure out which country actually fits you, and finally go over some key risks and realities.
All right, Part 1. Portugal's shifting tax landscape and the end of the old NHR.
For a really long time, Portugal's non-habitual resident regime was literally the gold standard. It was broad, it was super generous, and honestly, it was simple. It pulled in entrepreneurs, retirees, and high-net-worth individuals straight into these gorgeous spots like Lisbon and the Algarve. But today, that reality is very, very different. Portugal has shifted away from that broad catch-all and moved into a highly targeted framework, usually called IFAC, or NHR 2.0. This new system is strictly linked to things like qualified employment, scientific research, and high-level innovation. So it's definitely not the simple universal tax haven it used to be. Moving right along to Part 2, Turkey's 20-year tax pitch. A new challenger emerges. While Portugal is busy narrowing its focus, Turkey is actively putting together a massive, non-dom-style framework to pull in global capital. And the absolute headline feature here, 20. Under this proposed framework, Turkey is offering qualifying new residents up to 20 years of exemption on foreign-sourced income. Think about that for a second. A 20-year horizon gives families, founders, and investors this incredibly long, stable runway to plan out their financial futures. It's a huge shift compared to a lot of other global regimes out there.
Now, obviously, a horizon like that is a total game changer, but it absolutely comes with some strict rules attached. It's explicitly designed to attract fresh global capital and internationally mobile individuals, meaning it only applies to qualifying new residents. And here is the absolutely crucial condition you need to know. You must not have been a Turkish tax resident during the previous 3 calendar years. So no, this isn't some retroactive holiday for people already there. It is strictly meant for fresh arrivals.
So, let's jump into Part 3. The main tax difference and the core duality between the two. It really all boils down to this fundamental duality and how these two countries look at you. Portugal's new regime is fundamentally activity-based. It looks at your profession and asks, are you working in the right qualified activity? Are you doing scientific research or driving innovation? Turkey, on the flip side, is income-based. It simply asks, are you a qualifying new resident, and does your money come from foreign sources? This changes literally everything about your planning. If you're, say, a highly specialized software engineer, Portugal's activity test might still be a perfect fit for you. But if your wealth is coming from offshore investments, foreign dividends, or a global business, Turkey's income test is probably going to look a whole lot more appealing.
But hey, nobody relocates on tax metrics alone, right? So let's hit Part 4, comparing the lifestyle draw. Europe versus the global hub.
Look, Portugal continues to sell an incredibly powerful European lifestyle. You're getting highly coveted EU residents, for starters. You've got that amazing Atlantic coastal lifestyle, these deeply historic cities, and perhaps most importantly for making a smooth transition, you have established expat communities. Because Portugal has been a hotspot for so long, they've built up this deeply mature, well-oiled relocation ecosystem. The immigration lawyers, the accountants, the advisors, they know exactly how to integrate foreigners into the local system without a hitch. Turkey, on the other hand, is offering a premium global access point. It perfectly blends the massive, high-paced energy and modern business infrastructure of Istanbul right there on the Bosphorus with Mediterranean luxury down in Bodrum. And frankly, Bodrum is increasingly rivaling places like the French Riviera, Italy, or Spain. Toss in its strategic geography, which is absolutely killer for anyone doing regional business, along with premium private healthcare and elite international schools, and you're looking at a totally different but equally compelling lifestyle proposition. Which brings us to Part 5. Which country actually fits you? Let's do some persona mapping. So, based on all of this, where do you belong? The choice actually becomes pretty clear once you map it out. If you're an individual specifically seeking EU residence, or you're a highly qualified professional or scientific researcher, Portugal is absolutely still your perfect fit. But Turkey?
Turkey is practically custom-built for sauce founders who are expecting future exits. It's ideal for crypto investors who really need proper liquidation planning, family offices managing broad foreign portfolios, and remote business owners with offshore clients. It's a really clear divide. Specialized employees looking west for a European lifestyle versus globally mobile capital creators looking east for a global hub.
Finally, Part 6. The key risks and the crucial pre-arrival reality check.
If you're a founder or an investor actively looking at Turkey right now, there is one absolutely massive question we need to address before you even think about packing your bags. Is Turkey just a blanket, zero-tax haven where everything you do is completely tax-free?
The short answer? No, it is absolutely not. Believing that Turkey is a blanket zero-tax country is a huge misconception. And honestly, it's the kind of assumption that could completely derail your financial planning.
Here's the deal. Any Turkish source income remains completely taxable. That includes rental income if you decide to buy local Turkish real estate. It includes dividends from local companies and any employment income sourced locally. If you're generating business profits through a Turkish entity or earning professional income for services performed and consumed right there within the country, you will absolutely pay tax on it. That 20-year exemption opportunity we talked about, it is specifically and exclusively focused on qualifying foreign source income.
Because of this, your pre-arrival planning isn't just a good idea, it is completely mandatory. You can't just show up and expect it all to magically fall into place. First, you have to meticulously audit your 3-year tax residency history before you even arrive to make sure you actually qualify. Second, you must strictly document the exact source of your funds. I cannot stress this enough, especially for crypto investors who need a crystal clear, verifiable banking trail. And third, if you're planning to sit in a cafe in Istanbul and run your foreign company, you've got to carefully analyze and manage your permanent establishment risks. You do not want to inadvertently create local tax exposure for that foreign business. There's this fantastic piece of advice from international tax advisor ÖZMEN-İstanbul that I want to share. He warns, do not choose a country based only on marketing headlines. You absolutely must base your choice on your actual income type, your specific company structure, your banking setup, and your long-term exit strategy. The marketing might catch your eye for sure, but your specific structural reality is what actually dictates your success.
The map of global tax relocation has fundamentally shifted, guys. Whether you find yourself leaning toward the highly targeted stability of Portugal's NHR 2.0, or you're drawn to the bold, foreign income focus of Turkey, you really have to stop and ask yourself one final thing. Is your current financial setup genuinely prepared to navigate these complex new frontiers? Don't let flashy marketing make the decision for you. Do the math, do the heavy planning, and make sure you choose the frontier that actually matches your wealth. Thanks so much for joining this explainer, and keep exploring.